All right, guys, welcome back to the channel. On another day where Bitcoin is red, down yet again, top to bottom, 10%, I want to highlight some of the importances when it comes to identifying local tops in the market. At the time when I put out the videos going back to December now, it's ridiculed at the time. The analysis is ridiculed because it seems almost impossible that the market could go down. And I guess at the very best for the bulls, the market could pause for a period of time, get stuck in a trading range, just as what has happened for Bitcoin. Now, I'm not doing this in hindsight. Well, today's video is in hindsight, but at the time, I put the videos out as the signals unfold. And before I go too much further into this, if this type of video suits you, if you find value from it, you might find even more value from TIA Premium. Link in the video description. Yes, it's an education platform there that we put out, that we put together, but we put a lot of time into identifying signals in the market for cryptocurrencies, for stock markets, and for the big one, the real estate cycle. So if you do find value from today's video, check out the links down below. Anyway, apart from that and hitting the like and subscribing, I want to go through looking at those local top signals. We saw it for the stock market. I put a video out in December for the Homebuilders ETF when it broke down from a key 50% level, something that I use on the channel all the time, something that I use in my trading all of the time, and suggested that things may be changing. That doesn't mean that it has to be the end. And again, from this video, I'm not suggesting that this is the end. I still think there is further to go in the macro cycle because, well, the higher term timeframes haven't broken down, but we have started to see some of the shorter term stuff, the dailies and the weeklies, that sort of thing, look like they at least want to take a pause. They want to take a breather. And we have had other signs that the market was ready for that weeks, maybe even days ago. Now from this video, we could see some bounces, just like you saw with the Homebuilders ETF. Why is this so important? You're watching a Bitcoin or a crypto video. This is the overall cycle. This is the stuff that we look for when it comes to canary in the coal mine type of signals for the real estate and economic cycle. And of course, if the economy's not doing relatively well, probably not going to see people gambling and speculating on the next latest shit coin, meme coin, AI coin, all this sort of stuff that people think they're going to get 100 X's on. So if the overall market isn't doing good, well then risk comes out of the market. That's basically my thesis. You might have a different one. Absolutely okay. It's your money. Do whatever the hell it is you want to do with your money. So today's video, I really did want to just touch on some of the stuff that we have covered, but then of course get into the analysis. The reason for revisiting this is, well, that's how you get better. That's how I get better, and that's what I'm sharing with you guys here. So some signs of that local top. This is from videos that you can find on the channel at the time. And typically I do see the comments and the feel and the vibe really start to elevate, mostly in a way of ridicule, or people can't get a grasp of how markets can change depending on what signals come out on the days, and then build up over weeks. And for the longer term signals, they build up over months. You're not going to see a daily signal that tells you the entire cycle is about to come crashing down. That no one's ever looked for that. It doesn't happen. It is, I'm calling it impossible. Maybe I just can't do it. And maybe there is someone out there that can get the exact single day, the exact single top price, and they will say that the market is going to collapse from that point. Most of the time, from what I've seen in my experience over the last 18 plus years, is that those people call it every single day. Eventually they're right, but of course that's no way to trade. Not that I've seen anyway. So signs of a local top, some of the things that we had seen at the time and that I posted about in real time. And when these things happen in real time, they can get a little bit trickier to understand how it unfolds. And I'm not saying that they're always right. Definitely not. So it's just some of the stuff that I've used before, and then I'm sharing it with you guys here on the channel. Stock market top signs, and then macro confirmation, not present yet. So there's still further to go. Yes, this is the winner's curse phase, 25, 26, somewhere there. I think what is happening right now is that we're potentially in a reset mode. When I say we, I'm saying the markets, the stock markets, real estate market, probably Bitcoin and crypto as well, but it's going to depend on your crypto. So I'm just going to reference Bitcoin only when I'm talking about crypto. If I mention the word crypto without saying other cryptos, just think of it as Bitcoin only at this point. So in terms of a reset, that is part of the wall of worry when you see bull market. So you see this whole thing up here. You don't see any corrections in this line, but just know that that's what happens. You get corrections along the way. That's part of the wall of worry, running right up into the peak. Generally at the tops, the major tops, you see very, very strong bullish news. What we've seen, I guess, over the last month or two, especially after the Trump election, this was a good one here, these sorts of things here. Pretty crappy image at the moment, but you know, Trump's in. There are some things to suggest that maybe we're getting around a bit of a fluffy point in the market. Some of these articles that were coming out, you know, this is posted on the 23rd from Ryan here. Stocks could gain another 20% in 2025. Embrace the bubble. So it's almost like the media and the speculators are coming on side of the possibility of a bubble, the possibility of further bull market. And then you start to find any sort of narrative that will fit this movement, you know, this sort of bubble. They're saying S&P could rally next year on a combination of AI growth and deregulation. And I see it in the comment section as well. You know, I pay attention to those, and people saying, well, you don't know what's happening, or, you know, maybe they're just talking to themselves. I don't know. But Trump's here, and Trump's going to change things, and Trump this and Trump that, right? That to me sounds a lot like this time is different. And it will be different for a period of time. Period of time meaning markets can keep going up, right? They can go up. We're looking at a long cycle here, and everyone can be right for a short period of time. And I think we're moving into that period where everyone is going to be right for a short period of time. And you could say, yes, it was Trump. Trump did this. Trump deregulated that. Elon did this. So-and-so did that. You've got money printing coming on board. You've got all these sorts of things that will push the market up. I think that's where we are heading. Some of these other charts here that we've looked at on the channel before, because as I said, I'm just reflecting on some of these peak periods in the market, just looking at the amount of money, or the fund manager survey, cash allocations fell to the lowest on record. So they didn't have cash allocated, basically not on their books. They're basically putting it out there into the markets, and you start to see some of these things at turning points. Let's call it turning points, because I'm not saying that these are the ends. No, just turning points in the market, and potentially significant turning points here. So US equity allocation surges to record high. There you go, December 2024. So a lot of money going into markets. I'm not saying it's over, but yeah, just some of these points here. You did see some of the, well, that March 2023 low. So you had a lot less allocated at the lows. And then eventually when you see the tides turn, they start to put more in. And then at the tops, you know, people are just thinking, why aren't I on board with this bull market? As I showed with that particular article there, and also with some of the other articles I've shown on the channel, where people are expecting higher prices, or the Wall Street is expecting higher prices in 2025. This one is also interesting. Buffett is loading up on cash. I saw this make the headlines a lot over the last couple of months. This is the end of the quarter for September. He's now at 28% cash compared to his portfolio. Cash as a percentage of total assets. So assets for, I assume, Berkshire Hathaway's here. Obviously says Berkshire. But look at where the collapses come in. .com crash, financial crisis, and he's at all-time highs several years before that. Each of these blue bars looks like they represent a quarter. So if you got the financial crisis here, that would be 2008. The peak is probably somewhere about there, 2007 top, October, okay? So quarter three, 2007. And there is the top, running into new all-time highs of cash allocated. That's what people are referencing here. You can see just in these last couple of quarters, Buffett's cash allocation is now at new all-time highs. But as you can see here, this happened for many, many quarters before the peak. So maybe we're into something like that again. We're running into new all-time highs, and his company's in the absolute multi hundreds of billions. Therefore, the cash allocation, of course, is also going to increase, and increase in terms of percentage, because he's becoming so big compared to the overall markets, or at least the markets that he wants to invest in. So that's point C, just looking at stock market top signs. The other one was the December video, Homebuilders ETF. I checked this out here. I showed that there. If you can check the video from roughly around the 18th of December, so about 3 weeks ago, looking at some of the signs there, that maybe things were starting to get a little bit overheated, needed time to reflect, digest the moves. It has been basically in a very strong bull market from June 2022 straight up, and now we're starting to see probably one of the biggest declines in that entire bull run. So we're starting to see an overbalance in price. That was also one of the pieces that we're looking at for BTC. But the main one that I can reference back to that you probably remember is the 3-day down rule. Let's have a look at that. So there's 3 days. The 3-day rule, in this case, it was 3 days down. You've heard me talk about it many times before. Lower highs, lower lows. The thing to expect was don't expect significant booms to the upside relatively soon. Relative? What's relative? Relative to the previous move. Here's the previous move out of the US election. That's the US election there. Trump in. People call this the Trump pump, the Trump effect, that sort of thing. And then all of these moves, these corrections that occurred during that move to the upside have now been exceeded. So we've gone down for longer than any of that move there. But when you see this, people just keep calling buy the dip. And what this tells us to do is just to be patient, to calm down. The emotion and the signs of the market are likely, not guaranteed, but are likely changing. And what did we see? Well, we saw it change. It definitely changed because it's been down for longer than any period through here. In terms of time, the correction in terms of price was also down further than anything we saw in the correction to the run up. And again, we've failed at 100K. It got a little bit higher, over exhausted here at 102, 102.5, and then pushed back for a couple of days. So again, a couple of local signs there. So as I said, these were all signs that I talked about on the channel in real time, knowing that generally I'm going to get a lot of kickback from people. They don't like that at the times because the emotion is opposite to what the signs are saying, and that's typical around those peaks. Again, just highlighting the fact that I'm looking at local cycle tops forming, and as I said here in number D, macro confirmation not present. So we haven't seen like a macro shift yet into an absolute catastrophic collapsing style bear market. So I'm not worried about that at this point in time. However, for BTC, if this ensues and we start to see further downside, obviously critical support levels that I'm watching, I'll get to that in the analysis in a second. But for BTC, if it does go below 74K, then we'd start to look at some signs that maybe this is going to take longer over this 2025, 2026. The stock market, maybe even real estate, commodities, they might start to take some of the highlight and some more of the awareness from investors and start to push their money elsewhere, because this would start to get a little bit, dead and boring for people. They're not seeing the price go up. That's a later thing. Right now, we're still sitting at $95,000. So not to worry about that. So let's carry on with the rest of the analysis. That's just my look at signs of a local top forming. You do get a lot of disbelief around those points because, yeah, you probably hear it quite often from other channels. That's why I suggest checking out TIA Premium, getting on board with long-term active traders and investors who are serious about what they do, and they're not flicking between different YouTube videos trying to figure out what's going on. Focusing on one style of analysis and then making that your absolute best, giving it your absolute best, and building your long-term trading and investing plans. So next up on the list, I want to go through the analysis for the day, for the week. Let's have a look. So 18-year cycle, we've had a look at that. There's uncertainty at the moment. At least that's what I can sense, because we have a fair bit of fear going on here. Fear on the stock markets. This is CNN. It's for the S&P 500. Yesterday, previous close was fear. Last week was fear. A month ago was neutral, and still trending around these lows. So I think people are a little bit uncertain. Obviously, that's why the fear is coming in as to what is happening next, what's happening in the markets. One positive to this is you generally don't see this come out too quickly at tops. Again, at least that's in my experience. Around the tops, people are still very, very bullish, and they don't think it's possible. Whereas now we pretty much flipped to that fear quite quickly, or we flipped to the uncertainty, flipped to that outlook of this could be over. To the downside, so far, the market has been holding up above 5,900 points. You can see that we only had one close here at 59.20, and the rest of the closes have all been above this level here, this 59.25. So this is an extension for any sort of trading ranges. Check this out here. That's what we're looking at. And so far, it's held above that 50% level. So even if this does break down, it might be a slightly shallower dump to the downside, but people would still get freaked out. Any sort of downside moves, if you haven't noticed by now, people get freaked out thinking the game is over. And any sort of upside moves, people get very excited thinking it's all back on. but they don't really know where critical or key support and resistance levels are that actually change the trend or shift the sentiment in the opposite direction. So for now, basically trading range going back to early November, so 2 months here. Downside targets still all in play. Support levels 5,700 and 5,600. Nothing more to be said there for the S&P 500. For the NASDAQ, same targets are still in play. Nothing has altered there from previous videos, 19,900. The thing that does change daily is basically how far away are we from those support levels on a percentage basis, and is that out of the question? I don't think 6 or 7% for the NASDAQ is out of the question. It wouldn't change anything in my opinion. The changes come below the August lows. So that's 17,350 points. That's on the NASDAQ. The VIX was an interesting one of late with higher lows forming. Note, I've got a daily chart here. Higher lows, not necessarily all higher highs. You can see a couple of them are different here. But on these higher lows, barring this one little spike out here in July, it leads to, well, it has in the past led to bigger spikes. Doesn't mean that this is going to be a lower low. Check that. You got a low here and then a low back here in April. So you got higher lows on the S&P 500, which is the white line. It's just the volatility is higher at those times. People are more freaked out by that particular move. It's the volatility index. So these periods here, you saw the lows beginning to rise and then a big freak out move happen. The lows begin to rise and then you got the dump. At the moment, we've got the lows beginning to rise. Do we see a final flush out dump? Ideally, in my absolute dream case, that's what I want to see because it's a beautiful anchor point. It's a beautiful starting point. It refreshes the market. It's like a bushfire, and then you get spring after that point. If bushfires happen in winter. That's my analogy for this period. So you can see on those moves, you're looking for those higher lows. Sometimes you get those significant bursts to the downside. So does it happen this time? Well, I'll leave that up to you. Yes, no, maybe so. But what we've seen in the past, and at the end of the day, the whole game is about probabilities. It still blows my mind that people can't understand that. They're looking for an absolute. There are no absolutes. But go for gold. Put your comments down below. So that's a look at the stock markets. Commodities, we've seen them basically track around sideways. Crypto and Bitcoin, let's start with USDT. Now, I do have a couple of these other data reviews here that I want to get through, some summaries of some points, but I'll leave that for future videos, so make sure you hit the subscribe button if you are new and like the content so you let YouTube know that you want to see more of this content. This one in particular is quite interesting. It's about the years that end in 5, and we've been tracking this now for over 2 years. We first saw this around 2023, 2024, but this is all part of GAN analysis, which we have talked about for years before that. But to see this in the raw data, really, really interesting. So I'll put this into a future video. USDT dominance. This is still mucking around between 3.7 and 4.6. So there's that recent top there. Now in the last 24 hours, it broke again above 4.2%. So that's the number that we've been tracking here right through the middle of basically the trading range at the moment. And the close was just above 4.2%. Now it has hit on a significant diagonal when I throw it onto the weekly chart here. And this diagonal is from 2017 all-time high connected to the 2021 all-time high. And it's just finding a little bit of resistance there. So this, obviously we want to see this chart go down for the bulls, for Bitcoin and cryptocurrencies. If this breaks higher, really bad for the bull market. And if it breaks past, I was looking at this earlier, roughly around 4.8%, that could be some pretty dire outcomes because that is your major 50% level here. So I'm still okay with any sort of movement up to roughly 4.8%, provided we don't start to see weekly and monthly closes above 4.8%. Potentially closes above that level could lead to something like we saw in 2021. This didn't close above it at that time, and obviously this was different. The point I'm making here is that getting above the resistance and then leading to further higher readings on the USDT dominance, that is what crushed Bitcoin and cryptocurrencies. And for the next move down, it wasn't able to break past the previous tops. And of course, that then led to the peak, the absolute peak in the market, and then USDT dominance took over, of course, being the bear market. So this is a bit of a cautious time here for the USDT dominance. Bulls want to see it come down. 4.6, 4.7, not too bad. You start to see close above 4.8. That's going to be a bit of a problem. In terms of the short term, if you're trying to be a Nostradamus on the daily here with your crystal balls, you have got 4.5% above and 4.6. To the downside, you definitely want to start seeing it break 3.9% relatively quickly. And the very closest number here is 4.2% on, I'd say, in the next day or two to break back below that level and then get below that diagonal. So that's what it's got to do over the coming week. Today's crypto fear and greed is at 69, yesterday 70, last week 70. It's still tracking around this green and very dark green. We popped this on yesterday's video, just looking at how the market had reacted to dropping from the extreme greed. And in the past, in every single case, it's gone to at least neutral at 50. So at least in that mid 50s to 40s. It hasn't got there yet, which, if we look at the probabilities, there is that chance that we would see further declines for Bitcoin and cryptocurrencies. Most importantly for this one here, it's for Bitcoin over this period before we were to see more solid long-term extreme greed, and that is a good thing for the reset of the market. The Bitcoin longer-term chart here, that monthly bar wasn't the greatest either for BTC. That's the December bar. Obviously a reversal here. If that is the case and we start to see some more downside, the 50% levels that I'm still watching around mid 50s, so 85,000, 87,000. The lows are still in play. The closer, shorter term lows at 91 to 92,000. And if we get even closer to the market, so the shorter term stuff, the daily stuff here, it wasn't the worst type of down day. So it was a good type of down day. Not the greatest, but a good type. Reason being is that it closed above its 50% level. So in the day, what happens there is that you had more buyers that closed out the market, so towards the end of the day, which is a good sign. The old saying, amateurs control the open, and what they did here was dump it, and then professionals control the close, and what they did at the end of the day is buy it all back and get it back past the 50% level of 94,877. That's just for the entire day. Now, extremely short term, therefore you could only expect short-term moves from that, and that could be on the case of 1 hour bars, 4 hour bars, but not really much more than that. Best case scenario from here is it starts to hold, continue to hold above 95,000, and then again try to tackle the $100,000 level. Now, if we do see that strength, well, then we got better chance of tackling 100K over $100,000. That's the strong half of the 50% tool. So you want to see the price remain above 100K, start to consolidate from there. And from this point, as I said in yesterday's video, it's okay that it takes a long time from there, 100 to 108K. Just let it consolidate for a month or two. Absolutely fantastic in my opinion. Just the longer time we can spend here, the better it is for that longer term bull market. Otherwise, a rejection at 100 would likely send the thing falling down past the $90,000 level if it doesn't get past there on this particular movement at the moment. You know, the trend is currently down. So last thing on BTC, I had the monthly chart here, the right translated cycle. This is something that I was talking about last year, so a year ago, when everyone was looking at this being a left translated cycle. They were looking at the end of the bull market from March. Didn't happen, and we continued on. We could be going through something similar to the January period, February period, March period, then you get into April, and then things started to really rocket away. This absolutely tricky game to play. You had a top there in January, pull back, slightly higher high in March, pull back, lower high in April, pull back, and then it started to go. So that was a very difficult time, not only with trading, but also with emotions, because of how many times it tried and attempted the higher price, getting into that new all-time high, and then having a big pullback. So if we are doing something similar to 2017, then hold on to your horses, hold on to your positions, and make sure you know where the exit is if it isn't able to play out. You know, if you've got further downside, know where those levels are for yourself, where those price targets are, that you just say, screw it, the game's over at this point, I need to get out. For now, none of those signs yet, at least from my own analysis. And of course, you've got to do your own there so that you feel comfortable and you can sleep at night. But if we do get through something like this at the moment over the coming months, quarter three, could lead to some pretty fast movements to the upside. And of course, the extreme volatility. Always there, always ever present for Bitcoin and cryptocurrencies. Total market cap, so this is a total crypto market cap, everything included here. Still in a relatively strong position, although we did get rejected there at 3.5 trillion and back under the 50% level, which was 3.4 trillion. The downside's still relatively okay. If it gets back to roughly 3 trillion, it's a 10%, or actually a 9% move from where we currently are, and back to those previous tops at about 2.7 trillion, about a 16% move from where we currently are. From the top overall, about a 27% move. So it's all been done before, all part of the averages. It doesn't necessarily scream anything crazy that the crypto market can't recover from. And we take a look back at the overall 50% level here, that takes you back down to 2.7. So again, that was roughly that 27% move from the top. And what we saw last time happened yet again after the 3 days, the 3-day rule, in this case 3 days down. You can see this top that came in here that got rejected. That one there, about 5% from the high. Last time was about 3% from the top and got rejected before it continued to grind sideways. Now, Ethereum, I gave you a bit of hopium for yesterday. If it can get through this period, this grind, I think we have some pretty big movements to the upside. The thing I like about ETH at the moment, the volume is basically drying up here. Had a fair bit of movement, fair bit of volume out of there to get, well, out of that previous consolidation, got above 3,100 and then pushed to new fresh highs. But for now, still trying to consolidate. Underneath 2,800, pretty dire. But for now, if it continues to consolidate here, like you saw in the last 24 hours, you also had that push down and slightly higher close above 3,300, then it's not looking too bad. Okay, so we're still in the strong half of the larger 50%, but the weaker half of the shorter term 50%. So basically, difficult situation. It's in no man's land. You don't have any clear movement below the support levels and no clear movement above the resistance levels. Trading range, no man's land. Solana, similar sort of thing here. It did push again lower, a little bit of increased volume with the professionals taking control here, closing the market just above some of those previous tops. So in a short-term sense, a good sign here, back underneath, whoops, let's draw a diagonal line, the diagonal here, ideally back above the diagonal, and then 211 and 220. So over the coming days, Solana's strength, or the strong position for Sol, is at least above 200, then 211, and then 220. So a few pretty key levels here. At the moment, still putting in those high lows, so no man's land yet again. Hasn't broken the lows, hasn't broken the highs. Sui, on the other hand, did what we talked about in yesterday's video around these sorts of peaks. That's the key issue here. So yesterday we looked at Sui breaking to new fresh highs and then back under those highs. Well, hasn't happened yet, but if it does form a lower high and reject off those tops at roughly around $5, that could lead to further downside for a prolonged period of time, because you've seen roughly about the same amount of time to the upside. You've seen price behavior very similar patterns here. Look at that top. Look at that top form. It pushed slightly higher. What that sounds like and what it, I guess, seems to be is that you've got this last exhaustive move from buyers coming in to say, yes, we're going to push higher. We think we're going to go to the moon here. And then the sellers step straight in very, very quickly and push it back under those levels. So they're taking profits on all of the late buyers here. And again, they try to push it higher because they all think they're buying the dip. And if, it hasn't happened yet, but if it gets rejected roughly around that $5 or even $5.30 and starts to fall again, well, that would be one of your earlier confirmation signals that you might be heading into something like this. So you can see the lower highs form, get rejected at the previous tops, and down she goes again, gets rejected again, down she goes again, and the rest is history from that point. And the last one might be a little better news for you. I'm not trying to bring you bull or bear news here. I've told you my thoughts at the beginning, and here we are with the cryptocurrencies at the end, is XRP. Still holding above $1.60. Looks all right. At the moment, still deciding what it wants to do. The main things that I note from previous pumps for XRP is that it goes on these we looked at it from between 2 and 6 weeks, right? Roughly 4 and 5 happens a lot of the time. 4 to 5 weeks of energy to the upside, 1, 2, 3, 4, 5. So it happened this time. And then it needs time to digest the move. Now that digestion usually poops out about 50 to 70% down. That's what it's done, I'd say, when we reviewed it every single time in the past. Maybe this time is different. I'm not trying to hate on XRP and hope that it dumps 70% from the top. Although if it did, it's still in a relatively strong position above all the previous tops there at 80 to 90 cents. I already hear the people saying that you're saying it's going here. No, not at all. But it would still be in a strong position if it did that and consolidated at 80 to 90 cents around that dollar level because it's above all those previous tops. So each of the previous times, 4 to 5 weeks on a median there, that's what I measured, does between 2 and 6 weeks with this extreme move, this extreme pump, and then it needs to digest. Digestion is roughly around 50 to 70%, maybe it's slightly less this time, and then it can be ready to go on another massive feast to the upside. Do note the timeframes between extreme lows to extreme highs are roughly 1 year. 52 weeks in this case, 57 weeks in this case, 56 weeks in this case, and I'm currently measuring in time here. 56 weeks takes us out to about July of 2025. So by that stage, based on history here, it doesn't matter whether the SEC comes or not, or it's approved or not, whatever it is, there is the possibility that the moves could be over. But who knows? By that stage, in the next 6 to 7 months, you could see XRP run to $6, $9, $10, whatever the dream number is there. There still seems to be a lot of time for XRP and that upside move. And if you want to find out more about TIA Premium, link will be in the video description and the pinned comment. Thanks again, guys. I'll see you at the next video. Until then, take care and peace out.